Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we will go through our regular schedule market update, analyze all the major indices and then go through our earnings plan update, see how those trades are going. We're getting close to the end. I think there's only like 4 or 5 trades left um, for Q1. And then we'll go into Joe's analysis to finish it up. So let's get started. Okay, so indices, SPX, NDX, Russell, all still in state one, our most bullish state. Sector overview, we had a couple drop into two. I think, yeah, even XLE hit one. So we had all ones and a three, but now we just had two. You can see here 3 days ago, 4 days ago, drop into two. So I think this is kind of indicative of, we got up to, high 40s here, dropped below kind of our main threshold of 45 as, but, kind of hanging right around that, like the last kind of run up was. High wise, dropped from 69 bullish to 61% bullish. So had some movement, twos popping up. So, but overall, still, very bullish overall for, a lot of indices. So let's take a look at market pulse here. So here's state ones and eights. You can see kind of last week, right around our meeting time here. That's the data we had on Tuesday. So that, since then, it's pretty much been just, S&P's been pretty flat. Obviously, the indicators are started turning. So eights are up a little. And close in a little more here. So eights, low 17-ish. Now we're up right around 21. So not huge moves, but you can see this last super bullish move over here. We're right around this kind of 45 level, above or below it, just kind of hanging around there the whole time that we, obviously fell off here. So, I think, just kind of use that as a guide. We're still above, 40. And, that's kind of how it's looking. We are getting transitions so into bearish states. So we all know, if we, let me pull out this eight. This is the last one. The twos will spike real fast when that pullback's coming. So we're getting a little bit here. So see if we'll get follow through. And then after that initial spike, we'll look for fours. And the fours really never materialized, going from 2 to 4. So they start in 1, the 2 here. And then, if it's going to be a bigger pullback, those 2s will start going to 4. And you can just see back here, the 4s has died. So, so that's what we're looking for. See if these 2s continue. Nothing really going on with the 4s right now, but that's kind of stage 2 of the pullback to tell us whether it's going to be deeper or not. But it's starting to look like it's trying to. But we had a lot of this before, where we maybe like dipped down a little and held basically like that 40 line and just kept grinding higher. So I'd kind of use the same thing, at least initially here. See if we can hold that 40. As you can see, this whole time, we held that 40 level. And then here, as soon as we dropped, I mean, the thing just kind of quick correction and then, found its footing. And then, the 4s pretty much stopped here and then, found the bottom and turned back up. So that's kind of the states I'm looking at here. You can see, we had very bullish action here with the highs, getting good highs here, 500, 400, 3. So those have kind of trailed off. So we're just kind of looking to see if we get another pop here if we start getting lows. So we have to have enough, to be an 8. So, if we don't have a lot in 8, that's where the new lows happen. Just like, you need a lot in 1 to make the new highs. So that's where new highs are made. So, we're up 21% in 8. So, just keep our eye on this, see if we get some kind of flash here. If we do, you'll be seeing 2s transition, and then, some spikes in the lows. And you can see, I think, the highs has kind of died right here. I mean, we had new highs 12, 13. So that's basically like the flat line. Then, things finally turned around after a little bit. So, just be on the lookout for that, as far as each day kind of monitoring, bearish transitions. Obviously, a lot more bearish yesterday than the bullish here. And then, kind of looking at the lows and highs. So we get the greens, we're good. So they kind of died off here, past few days. So we can keep our eye on that. Let's see, this is moving averages. So the 20 days already flipped. That it's pretty fast moving, but obviously when they're above, it's bearish. But right now we're pretty much inflection point for 50 days. So all symbols in the system, um, whether they're above or below, they're 50. So we're right there. So 50 above right now. I'd say probably with today's action, it's flipped. But we've had them here, or we've had them where here, crosses, and obviously it's a bearish trend overall, but we've had quite a few where it's just popped and turned around. So kind of inflection point, I think, overall for the market, which way we're going, which will be determined, with over the next few days. I think one of the big kind of drivers, and I'll pull it up before I go to the indices, is the 10-year. So we're back above 4.5. Well, over all the discussions over the years, we know above 4.5 is, I would consider that a headwind for the market. So, and if we're, getting higher and higher above 4.5, the worse and worse it gets. So, our high here was right around 5. So it's back here, October, shortly at the lows, right? So end of October was the lows for the market, and it just tore after that. And we got another spike here. So, if we can get above this, it's going to be ugly for stocks, at least while rates are high. So,
Hey, Josh.
yep, Haley.
Hi. Do you know why? I haven't heard as to what the motivating factor was today for the 10-year to go above 4.5. Do you have a feel for that?
I know like the Fed minutes right, last week, they had kind of surprised where some of the participants were saying they weren't opposed to raising rates further, um, which was, I think, kind of the shock for the market. Everyone thought we're done, right? And
Uh-huh.
I think we're done, unless something really gets wrong. But the I think it's just been follow through with that, and we haven't really had any inflation readings, right, Joe? Recently
Yeah,
in the last,
nothing, really out of whack.
yeah. So, I think it's just, we can pull up this chart, right? The Fed tool, the expectations are just creeping, remember, like, it was like, let's just pull up end of year, right? We can cover this now. Remember when we first talked, so we were talking about this a long time ago, like it was like 375
Yeah.
was kind of like, the target, right? We're
Yeah.
now almost at no cuts for the year, right? So this is one cut. by December. So, higher for longer is kind of what I think what is driving the rates. That's more. I don't follow all these Fed people talking, but they're out there all the time. Joe thinks way too much. I think way too much. Out there, but I don't follow every speech that goes out, but the expectations are just less and less cuts, and I think, I mean, now you got a little bit of a hike, right? I mean, that was unthought of,
Yeah.
like, a year ago. So, um, yeah, so I
All
think
right,
it's
thank you.
a big thing, and then, these rates also kind of drive currencies too, right? Um, so if we have a lot higher rates, our dollar's going to be more attractive. We're almost at parity with the euro. Japan is getting crushed. I don't know if you guys been following this. Joe, did you have anything to talk about with that? I know there's been lots of intervention stuff like that for Japan, but
Yeah, I
did you
think just broadly speaking, Josh, as those Japanese rates, which have been, zero forever, and I think are around 1% now,
Mhm.
as they go up, I've just heard in trying to track things that certainly is putting pressure on our rates to a point,
Right.
and pushing them a little bit higher. So I think that whole Japan thing is worth just keeping an eye on from time to time.
Right. Okay. That answer it for you, Lee?
Yes, much appreciated.
Okay. Yeah, just feel free to chime in. So let's get into SPX. So here's the entry 51.87 on the 7th. So obviously a nice start. Pop off. Here's the typical route, right? So we're kind of following that. Um, and we definitely ran into like a stop line, some kind of strong resistance right in here. Um, you can just see it just goes straight across, kind of up and down a little bit, but so I'd kind of expect, it's following the typical, pattern, wave kind of pattern here. So, I think the key thing is, staying above entry and really above, 5,200. That's the bottom of our range. And the top is 54. So really it's just kind of staying above, that 5,200, which it did last time. And we've been in 15 days, 43-day average, average moves, we're about halfway. So, still got a lot of time left on average, but, if we do the typical move, really it's going to be this area. So entry price, and that, which is 51.87. You got 5,200. Sorry, I'm just scribbling too much over there. The 5,200 over there, the entry price 51.87. And then I'll pull up the chart here. We also have the 20, that's 5,240. I think we're above that still. I think we're 5,280, kind of range. So nearest to the nearest support is that 20-day 5,240. Then you got 5,200, which I'll show here. Right. Right. Okay. So, 5,200, that's kind of right around that entry price. So it's kind of a problem before, but that's the bottom of our range. 5,400. Sorry, I misspoke earlier, but this is the entry price, 5,200, right around that area. So that's our next support. Bottom range is 5,000, and I misdid that, so sorry.
Lo and behold, Josh, 5,200's the threes retracement from the recent up move, just FYI.
Yeah, I was just flipping numbers. So that's the bottom, so that 5,000, that's basically what held last time, right? So this time, on that pullback, and that's the bottom of the range, top range off chart, 5,400. But this is kind of like the entry price for the modeling. It's a little below there, but we got 20, so lots of support on, if we do test lower. So you have to get through a lot, 20-day, 50-day, kind of like this 52 is, you can see over here was showing, resistance in the last move, and we'll have to see if that turns into support here. So it's kind of right in between these two anyway. So this is, a general area that, if it breaks through, then you would expect it to test 5,000 again. If we can get through these two moving averages, but we'll have to wait and see on that. But, as long as we're making new highs, which isn't going to be today, and holding above these, this 20-day was huge last time. So, the indicators will be there. We start breaking these, the highs start dying on the market pulse. Just, really good indicators to, at least look out below for, short-term down move. So, okay, Russell. Yeah, I don't want to say it, I told you so, but 2,100 failed again. So we had one close above 2,100, 2,109. It was on the 15th. And since then, we touched above it, but closed below. I mean, 2099. So it was trying, and then just kind of dipped down here. So we're right around, the entry price here, 2064. I think we're below that, 2040. So we're below entry. Not a good sign overall. We want to kind of hold that level of support. Next level down is 2,000. Top of this range is 2,100, which is, been a problem. We'll pull that up on the chart, but, could, if it holds, just like S&P, if it holds support here, especially, right at this entry price level in the 50-day too, which is right below this. I think it's like 2040. So 2060 to 2040 is kind of like the, big support kind of range, and holding that, if we hold that, then obviously we can make another run up. I would expect that, and try and get above 2,100 again. So, but if not, if this turns into resistance, and we're heading down, we got 2,000 as support below that. So let's pull up the same thing as like SPX, 15 days in, 36 average, average move 6. So we had a little pop, but really it's at 2,100. So let's take a look here. I'll throw in the lines. There's the problem right there. And we talk about this being the rates and most rate sensitive indice out there. So rates going up, especially above 4 or 5, not good at all for the Russell, and it's not going to be going higher if rates keep climbing. So we talked about the low back in October when rates were the highest, right? That was back here. When they finally peaked, turned over, and then, this thing just shot up, right? So now, just kind of looking at rates, rates go up, this thing goes down, rates, it's kind of inverse if you think about it. So higher rates, lower, more problems for Russell. So what do we got? So we got the 50, like I said, like 2040 kind of range. We got enterprise 2060 kind of range, and we're below the 50-day right now. That's not good overall. Whoop. I accidentally closed that out. My apologies. But the charts are pulling up quicker now. So sorry about that. It's a misclick. Yeah, so 2040, so we're below that, So, if we hold below there, then you got the stop loss right around 2000, and that's kind of, if you look at the charts too, every 100 is kind of support and resistance. I mean, if you just looked at this 2000 here, damn it. So it's almost like every 100 is like support and resistance. I'll show you here. Like resistance getting popped, came right below problems. So you can see it's almost every 100, this here support, took off, test. Yeah, so this one's a lot easier actually if you look at it. So 21 failed. Yeah, we'll see if we test 2000. So even if we drop below that 50, as long as we hold that 2000, same with SPX, we want to stay above at least the 50 on SPX and stay above, I think that's kind of the key, staying above these, the 50 here and staying above 2000 here. So, but really just keep an eye on rates. As far as like Fed balance sheet, I went through this, everything's kind of moved up. Went up to go month through month, but year overall, there's basically, it's like for one cut and probably in November right now. So balance sheet pretty much did nothing last week. I'm just kind of monitoring this to see if they start, they said they're gonna taper off a little bit, but so far, it's still intact, pretty much the slope line here. We'll see if it starts like flattening out, but nothing really changed there. I did want to pull up, I know Sadir talked about this. So this is the yield curve from this year and current. So you can see all the short-term rates were pretty much the same, right? But longer-term rates, you can see right there the 2023 is 4.5 for the 2-year, and now it's pretty much like 5%. So this whole curve has shifted up quite a bit, which is problematic for people holding stuff in this range. So like long-term treasuries. So when yields go up and they have, this junk 10-year, below 4%, and now, it's up 4.6. I mean, if it keeps going higher, the price of these go, these treasuries that they're holding go down a lot. So, and the further out the longer the maturity, the bigger the drop. So it's still, I think, a concern for banks, especially if, this thing keeps going higher and finally, returns to like a normal, um, which is kind of like that, not that drastic, but if we go from like, if we had like 6 on the 30, and it's almost flattish, but um, the long, the way that this thing's moving, um, these expectations, we talked about it from 3.75 being kind of the average to now like one cut. That's reflected here in the longer term. Their expectations of cuts are dropping. So the longer term rates are reflecting that. Hope that makes sense. So, um, okay, I think the last thing I just had kind of a quick chart. This CPI. Just saw this one. So they started doing calculations where they can swap substitutions when prices rose. So like when radishes go up a lot, and people say, I don't, I'm not going to buy it anymore, so I'll buy zucchini or whatever. So they can swap whatever they want. Things get out of control, so they just so you know, it's out there. This is a fact by Bureau of Labor and Statistics. And that equates to about 0.2% of them basically doctoring the numbers to make it look better. So thought it was interesting. Yeah, so there it is. All right, I'll open it up to questions, comments on the market overall. And thanks, Lee, earlier for the question. Anyone else? Don't be shy.
Hey, Josh,
Yep.
I've heard several times on the financial news that I watched that the Russell has got, and I hear a number like 40% of the companies really don't have any true revenue. They don't make any profit.
Yeah, profitability. They have revenue. They don't make a profit. Yeah.
Okay. And as the interest rates go up,
Mm-hmm.
then these, and they call them zombie companies,
Right.
whether we agree with that or not. But as the interest rates go up and they have a more difficult time borrowing money to conduct business,
Yeah.
then a number of them should be failing.
Right.
Well, I don't see or hear a lot about failures now. Do you? Or does anybody? Joe? Anybody?
As far as companies,
Yeah.
no, I heard Red Lobster's declaring bankruptcy.
Yep. Yep.
But no, I mean, I don't hear a ton, Joe.
No, I don't. Some of that, Josh, we're into the weeds with the symbol changes and all that. There may be some stuff, under the surface, but yeah, no, I don't see any, any headlines about it.
Yeah, I would think it'd come in kind of waves, in my opinion, Joe. So like, they put like, it's like quarterly, like semi-annual like maturities on a lot of these kind of loans. So, if, whatever company, they have revenue, but, they've been losing money for 4 years. Um, and, they have to basically get new terms on their loan that, is expiring. They just want to roll it over. At that point, I think there's going to be problems, right? Because the rates are a lot higher than 4 years ago. And they're still not turning a profit. And, I don't, I would think it would be in kind of waves. But you don't know. I mean, it's up to the banks, really, about whether they're going to continue lending or, um, you know, but I mean, even like the Russell, they're not like little tiny, they're still pretty big companies overall, like, um, but yeah, I just haven't heard a lot about it. You never know,
Yeah,
like, they talk about like walls of real estate issues, like in commercial real estate, where like a bunch of maturities will happen, and then, like a lot of the prices have just, dropped a ton, like, say you have like a 5-year, loan, like no interest loan, right? So you're just paying the interest on it. Um, and 5 years later, let's just say that's coming up in next month. It's your real estate price dropped, right? And the interest rates are uh, extremely a lot higher than what it was before. So,
right,
I think,
right.
it'll be like a wave of them, It's kind of like that Silicon Valley Bank. Remember last March?
Yeah,
Yeah, it's just like a big wave of them, and then the Fed kind of turned everything around for a little bit, and just cleared out that. J.P. Morgan got some free assets, and then just back to normal. So I don't know how big it'll be, but I would expect it to be kind of in like a wave type thing like that, based off of regular debt maturities.
okay. All right. All right, thank you.
Hmm. Joe, did you have any other thoughts on that?
No, Josh, nothing bad.
Okay. Okay. Let's pull up the plan real quick. We don't have much left. We got two on the 31st. All right. Hopefully this pulls up quick. Earnings plan. So we're only, gonna put out the next one like probably right around here, 19th. This is, keeps on grinding. So this one's already done. So we got 1, 2, 3, 4, and then this is the next quarter. So these don't apply right now, but we got some bearish runners and then one vol rise. So um, 4 more trades left in there. So let's take a look. So we had another bullish pre-runner populate. This did not do well Q1, but CIEN. So that came in on the 24th, and kind of break even so far. So it's a short one, so you get to the 5th to get out before earnings. But this has been one of the down trades strategies this quarter. Normally one of our better ones. Bearish, we only have that one. Bullish runners, those have been good. So we had 2 more come in, and those both closed out. Palo Alto closed out in a couple of days, and then Ralph Lauren. That was like a day or two trade. Both hit their profit targets and got out. So kind of making up for the bullish pre-runners. Bearish runners pretty active. So you saw we have like 3 more of those. Um, so we're up like 1,000. We got 4 trades. So we need target to drop a little. TJ Maxx. I think Baba's down pretty good. That'll probably hit. Yelp. So we got 4 active. We got 5 closed. All 5 of those have been winners. It's a good sign. All hitting our profit targets. So the bearish runners have been good for Q1. So we got quite a few more coming. And then we got vol rise 3 active. That one's profitable. So, recently I think we've turned this, we were right around break even, maybe down a little. I think we're up now overall. It's not like a banner quarter, but at least it's not going to be like a ugly quarter. We see one of those every couple of years. So, um, So we got 3 open, Foot Locker, I think, get out before, close today. Not sure where that's gonna end up. It's gonna be close. Costco, and then, how do you say that one? It's like Amberilla or something. So you got those tomorrow closing out, but so far they've been winners so far. And that's about it. Any questions, comments on earnings trades overall? Okay, well, I'll turn it over to the maestro. Joe, you ready?
You're the maestro, Josh, but I will pick it up. Let's see here. Where did the charts go? What are you seeing on the screen?
You're not sharing yet.
Okay, I'm trying to, and there we go. Bingo. Okay, a lot of charts, and thank you. Not really much to talk about here, except that we do still have time, in terms of the average move. We haven't really, with the exception of gold, banged up against, the average moves yet. It's kind of been a, not static, but kind of slow moving, state one for a lot of these things. But I think part of that is coming off of the monster run out of the October, November lows. I'll start with, let's see. Okay, these have been shifted around here, but I was going to start with, well, there's TLT, which Josh talks about all the time for good reason. Same line we had last week, and just pulled up the lower line. So basically in a channel, we have lots and lots of numbers starting tomorrow. I don't know, it was a week or two ago, one of the numbers moved the markets, which I don't think any of us kind of anticipated. And tomorrow we have the first of the PCE numbers. Tomorrow's an estimate. Friday, I think the core PCE, is the biggest number that people are looking for. But I say all kinds of ISM numbers, job openings early next week. I think, impetus to move, the 10-year and therefore rates over really between now and next Wednesday. A lot of possibilities. I will, let's see, start with SPX retracements, as Josh went through it thoroughly. The 3H retracement is, basically that 5,200 number. But there are actually, I think, 2 big days, and one is just, I guess it was last Thursday or Friday. You can see that big red candle, but then we had one back, to the left of the retracement lines on April 4th, bearish engulfing patterns. I think the real question here is, does this bearish engulfing pattern turn into what this was back, started on April 4th? And I mean, some of the market topped out March 8th. Here's the 21st. I got SPX, but, I think, some of the leadership, the semiconductor index, they were kind of ahead of the market in terms of rolling over first. But on April 4th, we got this big bearish engulfing pattern. We horsed around for a couple of days, and then back down again we went. And essentially in the SPX, we got a 6% correction to the downside. I think the whole question here is, does this whole low of the other day hold? We're not far away. And ironically, and one of the things I love about the market's just the symmetry. I mean, that big monster bullish engulfing pattern, last Thursday, the low was 52.56, in the SPX. back to this big bearish engulfing pattern on April 4th. How about the high of the day? 52.56. So I think we're somewhere about 20 points above that now. First of all, let's see if that 52.56 number holds. You know, if it does, obviously we're going to do okay. If it doesn't, you know, we'll back into these retracements. And essentially the retracements are between 5,200 and 5,100 to the downside coming off of the April 19th lows. So 51 to 5,200 in the S&P. First thing we got to do is break 52.56. And, you know, we will see, obviously. But another thing, especially when the market's starting to roll over, and I think I've said this before, it's always really important to me to see how the market closes. You know, so, you know, do you close in the lows or do you rally for the last 30 or 45 minutes? And I think today's one of those days. Keep an eye on, you know, how the market closes as opposed to just, you know, the high and lows for the day. I think it, especially if you close on the lows and you start a, you know, bearish trend, it suggests that, you know, the following day is certainly going to open to the downside. SPX, you know, Josh was talking about it earlier. There it is versus the 20-day. Still have room to get down and test that, certainly. And then I did want to just pull up, you know, the weekly charts. We don't, you know, use them too often, but, you know, a lot of green bars. And, you know, a correction is never an unhealthy thing for the markets, but I think if we're to get one, it's going to be muted. Next, kind of a similar approach with NDX, you know, with good old NVIDIA leading the charge and a few others. It's continued to stay pretty strong. You can see it had the bearish engulfing pattern last Thursday as well, has rallied off that. But, you know, let's see whether this low, you know, kind of little short-term low at 18,462 holds retracements. And actually, you know, backing up a little bit, you know, with that April 4th, a bearish engulfing pattern here. NASDAQ had, you know, same thing about the correction in 2022 and even last year, because, you know, the techs have raced higher, their corrections are deeper. And so where the SPX pulled back 6% coming out of the April 4th bearish engulfing pattern, NDX pulled back 7.5%, but it was lightning quick. And this is where, you know, the beauty of options come in. I mean, if you've got on, you know, married put or, you know, some other strategy, you know, the thing that I think has changed about the markets over the years is just the speed with which it moves, not really all that much else. And so, yeah, we'll see whether, you know, these recent lows in NDX and SPX hold. But again, that sell-off that we got in April was 11, 12 days. You know, some of those big tech stocks like NVIDIA and some others that we talked about, those things pulled back 20% in that period of time. And then, you know, off to the races they went. There's NDX versus the 20-day. So certainly room to pull back there if the market's going to roll over. And then, you know, there's the weekly chart, you know, lots of, interestingly, you know, more red in the NDX chart on a weekly basis than SPX. Russell, Josh covered it thoroughly. You know, we've still got time. We're basically just laying around where the entry point was for state one. As Lee pointed out, many of these companies, you know, aren't making a dime. They're losing money. So, you know, it's kind of, and hell, it was, what was it, a year or two ago, Josh, where we just, you know, were bored to tears with Russell just going sideways for so long. And that's basically what's happening here. There's, you know, just a small channel with the Russell, not a big deal. It's a wide range that we're probably not going to touch the lower or upper bound anytime soon. You know, I just pulled up the Dow. The reason, you know, and it's the 20-day that's there. You know, it's the one index that has, you know, traded down through the 20-day. But and maybe it was the length of the chart, the 3-year came up, and, just the potential double top, basically at 40 grand in the Dow, just caught my eye on this particular chart. So, it's a big round number. We've pulled back, handsomely from there. It'll be interesting to see whether, in the weeks and months ahead, we can get through that 40,000 range. If not, I think there'll be a lot of people talking about double top, double top, double top. Backdoor leadership, XLK, as Josh pointed out, a lot of room in terms of the average time with a lot of these state ones. Had a very healthy move, already. And, we just see whether this thing back and fills. Most of the techs, for the most part, I think, have had earnings. XLF, talked about it, I think, briefly last week. Always important to keep an eye on the financials. Generally, when, we're in a compressed way, it's not a whole lot different, over the last month and a half than, the Russell. You got a trading range. It's just kind of backing and filling. And, as long as it holds those April lows, it's still very constructive, I think. And, fair amount of time and certainly a lot of room in terms of average days and average move. I pulled up energy because of, the big announcement with the oil merger. So, decent retracement here, just probably shy of a 3/8 retracement coming out of the January lows. And, it'll be interesting to see how these things react after today's merger announcement. I think, pull up healthcare. That was out of line. Yeah, healthcare. And again, we've put the ETFs in order of their importance in the S&P 500. Here is, the healthcare complex, and, it's, you'd be talking about possibly a double top there too if things roll over meaningfully. Just get into a couple individual charts just because there's, we've still got a few earnings. Earnings have been very good, as everybody knows, but it's a Salesforce, and it rolled into a state too, in the last couple of days, had a hell of a run out of the October lows. And, what I found interesting is just its level currently. So it'll be interesting to see whether it can hold this, basically 265, 270 range, off the earnings, which come out tonight. Another big one is Costco. I think the multiple on this thing, the forward multiple on this could be in the 30s. I'm not 100% sure I got that right, but it's, been on fire as, some of these other retailers have been as well, but very, very, very selective. I have a whole list here that I couldn't pull up all the charts, but Costco, their earnings come out, I think it's tomorrow morning, if not tonight. They're looking for 371. Salesforce looking for 237. These things have had such monster runs. If you get a sell on the news, chances are, you get a half decent pullback, and then, the market goes from there. But yeah, Costco has been something else. One other one is Dell. It's and basically coming out of their last earnings, it gapped up. I can't tell you exactly what they said, but there's been a lot of chatter about Dell and I guess using, some of the NVIDIA chips, and, it has since February just been on a tear out of the last earnings. So Dell, their earnings are out tomorrow, I believe. They're looking for $1.25. So I think that's one that's really pretty darn important to watch. Look at how that thing just ripped through target 3. But I think Dell, if I had to pick one stock to keep my eye on over the next 24, 48 hours, it would be Dell and its response to the earnings. Just some of the different retailers. We're getting conversation that the economy may be slowing. But the list of retailers, and these charts are all over the map. I couldn't pull them up, but in the next 48 hours, we got Abercrombie and Fitch, we got Dick's, we got American Eagle, we got Best Buy, Dollar General, Burlington Stores, The Gap, Nordstrom's, Kohl's, Foot Locker, Dollar Tree, Five Below. All of them have earnings, in the next, I guess between now and I think, Friday. So, there will be a lot of snapshots, a lot of, forward looks about maybe where the economy's going. So, I think a lot for the market to take in, as there always is, but I think it's an especially active time for news over the next, couple days. So can't wait to see what the markets do. And again, I think how the markets close when we're starting to roll over, especially after, a nice big bearish engulfing pattern, is worth keeping an eye on. So 52.56 is that short-term low, and retracements again in the SPX, 5,200, 5150, and 5100 are the retracements to the downside. So happy to talk about anything if anybody's got any questions. Otherwise, back to you, Josh. If no questions, I do have, I have a question, I guess, for our loyal followers. If you have anything you want us to look at, either on a weekly basis or just from time to time, don't hesitate to reach out to Josh and I. We like doing the homework.
Okay, thanks, Joe. All right, last call for questions, comments before we wrap it up. All right, well then, thank you all. We'll do it again next week. Thank you.
Thanks,
Thank you.
guys.
Thanks, everybody.
Yep.